So let's go. So this is the 12-hour time frame, right? This area is an important area where price might likely head, like, reach out to later. So it doesn't really matter right now in this area, but just to identify like some key points area in this whole time frame. But like we are talking about the monthly, so the monthly now give you some perspective, or like the 12 month now give you some perspective where price might likely head to if we are to come like start buying up right now, something like that. But looking at this current rate, we have a structure broke to the upside, then we retest this last liquidity area, or your demand zone, whatever you want to call it. But yeah, so now with this high to this low, we want to look for point of interest within this range. First, we say we traded like above this level, and now we now have a fair value gap here, this area. It's gonna be bro. You can also shade it. We have a fair value gap, and as well this open and close area is also an important area, right? This is the monthly time frame, right? So we know price might likely reject from here or here to push back down. We're not saying we are coming back down to take out this low. It could happen, but the structure will also tell us, the price action will tell us what is going to happen then. But with this monthly time frame, we know last month, which was February, was bullish. Not really bullish, right? But like it's like a balanced market somehow. So we also know the high and the low, they are also key areas because they are area of liquidity. We just have to keep that in mind. You coming into the chart, you must always have this in your mind that, okay, I know this market is what? Repricing area of liquidity and rebalancing imbalance, which means we are seeking liquidity either way from the external or in the internal. It doesn't matter which, however you may understand it. The internal range liquidity to the external range liquidity, the external liquidity to the internal range liquidity. But we seek liquidity by repricing area of liquidity, like the key areas, and we rebalance inefficiency, which is the fair value gap. So we know we have a fair value gap from the monthly time frame, and previous month high and low, they are area of liquidity. They are very important in the market. You can identify them just for you to know, or you can just work with it. And we also see this area as well, open and close area, is also a key area. So now we are going to the weekly time frame to look at the structure. This area, I marked it out from the what? From the monthly time frame, open and close, and you can see what it looks like in the weekly time frame. It's a key level. So
Well, can I ask you what made you mark the open close area?
It's always a key area.
Okay.
Because they were like demand and supply, like which is buyers and seller that were participating in this area. You can see price was selling down, then what, buyers push it up, they push it up to this extent, then sellers now take over again. So anywhere price, for example, have some kind of volumes or stuff, that means there were people participating in that area. So which every open and closed area, they are key area. All you need to know is when price gets there, you want to see if there is some kind of reaction or something, and following the trend, yes, they are very important. So I mark this out from the monthly time frame. When I go to the weekly time frame, it becomes an what? Other block right here from the body, which I always mark. That's why you see it's right here. So I know this area is also an area. Then look at the monthly low and high. What can you see? It's like a range. If you look at this monthly low and high, and you look at price action, you can see this is a high, a low, a higher high. We expect a pullback and probably something like this. You understand? When we created this high, what do we do? There was a fair value. Oh my God. There was a fair value gap. There was a fair value gap right here that we came. This is what we seek external liquidity, or however you may call it. Then we reprice or we rebalance inefficiency, which is right here. Like I explained, we seek external liquidity, we come back to internal liquidity, then seek another external liquidity, then come back to internal liquidity to seek another external liquidity. Or if you understand this, price, repricing area of liquidity, rebalancing inefficiency, now repricing area of liquidity. Then because we also have a fair value gap in that ways. Yeah, but I mean, we did tap into it right here. I will also identify this fair value gap from the weekly. So we also reprice inefficiency right here. Then we might go lower before we go higher. So this is all about it. And the area right here is this, the fair value gap. You can see there is a tiny fair value gap there. So everything in this market counts like this. So, and also we also have this area, a balanced area before a displacement, imbalance occur. So this is also what your area. You can also label it as 1 week, but right, like this, just to know your area of liquidity. So what is this telling you? You have a level now, which means if price disrespects this fair value gap, your next level will be here. So you will be likely to take a trade down to this level. There is nothing to be scared of, because price might do a little bit of consolidation or go higher or something, but in as far as respecting the high, price might retest this area before we will see another break of structure or external liquidity be sick. Plus, we have a level in this area, that a higher time frame level that we might seek, which is the fair value gap and this area right here. Do you understand? Before I continue.
Andrew, can you please go back to the monthly? I'm so sorry.
What?
To the monthly, please. Can you go back to monthly? To the month.
Okay. This is the monthly time frame.
Yeah, okay.
Open and close right here, the fair value gap right here.
Okay.
This our higher time frame point of interest that price may likely buy towards.
Okay.
Is there anything that is not clear right here?
No, I'm good.
Okay.
What about this black line? The other one at the top
This one
of
right
the
here,
yes.
what I just explained, this is an open and close market. This candle closes right here, this candle open right here. This is an open and close area.
Oh, okay.
If you draw down to the weekly time frame, you can see that area is very important. This is like a supply area.
Yeah.
What happened? Market was balanced right here before a displacement to the downside.
Okay.
So what makes that area a key level, a key area for the market? You understand?
Yes.
So basically, right here was a level. Probably price didn't respect it. If we draw out this line, and go to the lower time frame, so not even like price didn't price respected that area. You can see this is the area. So this is when price came down, created that area. When price was moving up, what did price do? Price created inefficiency. Then price mitigated this line to come back to seek this area. Price always respect those areas. You just have to know how to navigate, use them. This was the area right here. So if you look at the time, price get to this area, he respected this area, moved down, then price came back, seek this liquidity right here, respect this area plus this area. That is why price didn't close above. It moved up, then what happened? We rejected and created what? A balanced market around here before this displacement. So when this displacement occur now, then we have area up here. There is an area here too, you know, but price has closed above it, which means this next area. That is why it's always good to mark out those kind of area in the higher time frame. Let me see if I can. This is it. This is the very first time price moved into that area from the very higher time frame. What did you see? We rejected, we created what we wanted to see. Then you could just enter this market. What am I doing? What is this? Here. From the body, however you want to enter it from, or let me see, let's say 30 minutes and 30 pips stop loss. This is 1 to 3. After 1 to 3, then price started pulling back up where? To this area. This or this fair value gap. But the fair value gap was mitigated. Then price pulled back to what? The other block again and started selling down. So in this case, maybe this might be your first area of liquidity or down or this way. That will depend on what price do before. So if price closes here, let's say the daily, there was a level here. If price, we have other level like here, stuff like this. So you might just, you know, probably target this area, first area. We're not here to backtest them, but you see, so when price hit this area, the price now move back, not like probably completed the move or something. Remember, this area could still hold price back down, but from the higher time frame perspective, when price reprice this area of liquidity, because after this price closes this week open, then fair value gap was created. That is why price came down to fill the fair value gap. If you were in this market knowing that price created the fair value gap, what you will be thinking is that price will reprice this fair value gap and then shoot up again. This is how price moved. Because inefficiencies here, we need to rebalance this inefficiency and seek this high right now. Something like that. Like I say, we are not here to play price back and forth anyway. So this is that. This is the same thing. I was just showing you guys that how that key level works, like the previous one where price get here, that a hold price. So we already know that we have another one here and a fair value gap. So price will respect this area. So in the weekly time frame, this is what we have. We have a level here, 1 week, and we have this OC 1 month, open close level, top right. So you already know what it is, and this is a fair value gap from the monthly time frame, FVG 1 month. So this is the weekly time frame. This is basically where we are starting from right now. After we already know, we have identified our monthly high and low, which we are going to be trading, the dealing range that we are going to be trading within. You understand?
Yes.
This is the new, because new month is going to open tonight. So this is the dealing range, this high to this low. We also know that this low and high are key areas like liquidity, but the weekly time frame will now tell us the direction where we are likely to go first. But we are going higher from what we can see. We are going higher, but the weekly will now tell us what we are expecting this week. Earlier the week before, we don't know how the week is going to be, how it's going to close or something, but the beginning of the week, we have idea where this price is going to move to first. Now, first of all, we have fair value gap that last week tapped into a little bit and rejected. So in this case, we might as well expect price to move higher, probably to take out this high and into this area of higher time frame area, then start selling down, or we might just continue going down into this area before buying up. Those are the only two things we are expecting, because price mitigates a higher time frame point of interest, rebalance inefficiency, which is right here. Then what does the daily looks like? So the daily now tell us that price favorite direction right now is the downside. Why? Because from the daily, we can see we mitigate this area. 1, 2, we broke a structure to the downside. 2, 3, we have a fair value gap that was created. That means price is most likely to do like this and continue going down to this area. We still have another fair value gap here. We can't just say this area straight away. Every point of interest in this market matters a lot, right? It might just be this fair value gap or this balanced area or all the way down here. But we take this thing according to the first lines of defense that we have in the market. So which means the very first one from the daily will be this one, the daily fair value gap. Then the next area, because this daily fair value gap, we also have this area that is also here, and we also have this area. But you don't need to crowd your chart like this. All you need to know, you just know where your POI is, because me, I mark from the body, so the body is always the best option for me like this. So all you need to know, every point where you have your POI, that is all you need to know. We know all these consecutive candles before the break, they are order block, area of interest. We also know from this body to this down, there is area of interest. So, but now, looking at the current price action, what do you see? We know we created a low, a high, a low, not a high, because we seek the high, we didn't break and close above it. But now price has broken this one, not this one yet. So, but what does price do? Rebalancing efficiency and seeks liquidity, the price area of liquidity. Where is area of liquidity that do we have in this area? We have this fair value gap, area of liquidity that we might rebalance, and this consecutive candle, the very beginning, then this area, plus this area from the higher time frame. So we have points of interest within this whole area from the daily time frame. So for me, I would like price to, first of all, so what is this whole thing telling me? It means that this higher time frame 1 week fair value gap that was created here, price is rejecting this area to do what? After also taking out this low, because this is a low, it's liquidity. It has taken out this low into a higher time frame point of interest, Now it needs to rebalance inefficiency, then continue what? Going down to seek this current low that we created into where? Into this higher time frame point of interest, which is the inefficiency as well, or this one, or this one. So this is what I'm mostly expecting from GU this week. We go like this, then we come down. Whether to this area, whether to this area, whether to this area, it doesn't matter. The structure will always going to tell us where we are going next. But this is what we are expecting from GU. So I expect either today or the first few hours to probably go bullish into this fair value gap, or I will take the fair value gap and this area. Because why? You don't just mark out this last candle, right? You see these two candles, they are one candle in some other time frame. I don't want to know which time frame it may be. I don't want to switch time frame or start looking for this candle. But these two area, these two green candles, these two up close candles, they are one candle in some other time frame, and it's your order block, it's your supply area. So having
Listen.
order block plus fair value gap in the same area, this is really a key area, which means we have 2 points of interest in one area, plus you only have this one right here. So we will likely respect this one over this one. So this area will be an area where we will be looking for price to get back to. So if you measure currently 50 pips is not much, but from 50 pips to seek the next area, to seek this low or into this fair value gap, we have at least 100 pips to the downside. So more, if not like just to this area first, it's 120 something pips. From that fair value gap to this other area, it's 120 something pips. So after, we don't know how many days it's going to take price to do like this and come down, whether here or here or here, before we start moving higher. So we still know we are going higher. It's going to be a choice for you. Either you want price to come down to wherever it might respect, here or here, before you take the buy to take out this overall high, or you can trade both ways, which is easy because the price action is already telling you that this is what price may likely do. Price might just open. First of all, seek this low first, then go higher, rebalance this area, then we start moving down to either this area or this area. On the 4-hour time frame, this is the daily time frame. We identify our key area. Let me write daily right here. 1 day. So let's go to the 4-hour. In the 4-hour time frame, what do you see right here? This is a previous order block, whatever you may call it, like this. It's still intact, but I will just mark out the body like this. But anyway, it's a previous area which becomes a breaker, but we're not just going to look at that one because we already identify our area of interest from the higher time frame. So on the 4-hour time frame, what else can you see as well? We have a low, a high, lower low, created some high right here, which is not that strong a high, and we also have another level right here in the 4-hour. But daily level and the 4-hour level, which one is more stronger?
Daily.
The daily.
So we don't rule this area out. We just trade once price gets into either here or here. The setup that is going to form is what is going to tell us, okay, yeah, we are going down now. So we cannot rule anything out like, yeah, the daily is stronger and we need to Just forget about the 4-hour. It all depends on whatever setup we see. Then we trade it. But knowing your levels is very important. If that is what you are struggling with, that is like making you not seeing trade or something, then knowing it is very important. That is why we say weekly fair value gap and weekly level right here. Well, we already marked out the higher time frame from the monthly level as well, which is this and this, and the previous month high and low. And the daily, we have the daily fair value gap plus this whole consecutive candle before this rally up is also what? An area. That's why I marked out this line. It's also an area. Then this area as well, plus the area from the weekly, which we marked out. So we already have 1, 2, 3, 4 area for this week in the downside that might hold price to rally up. Then the 4-hour. So we have to look at this whole area very well. This level, you can see we rebalance this area. This area will rebalance this area as well. So this is where price is at right now. I mean, not like where price is at right now, you know. This area is also balanced. When we created this area, we filled this area to push price higher and rebalance this inefficiency. And as well, we created this, we rebalance this area. So the fair value gap is our first line of defense, very important. So we will be looking at this area very closely, very closely. We will be looking at this area, these two areas very closely. Maybe this is where price might just respect and continue going higher, or we might just dip down a little bit to this downside. But we will see. Price doesn't lie, so we definitely see that. And the 4-hour level, but I would prefer this daily level. But once price get to any of this level, then I'm going to react. That's what we do. We don't just say, oh yeah, price is going to go up and do. We already have a level that price might reach, will likely reach. And once price reach there, then you can react. This is what we have on GU. Identify your area from the monthly down to the daily, then you wait for price to now start moving towards your key levels. I don't need to mark this one out yet. Not even this one yet, because I don't want to crowd this area. But the weekly is fine because I identified it from the weekly and the daily fair value gap as well. And you know we have already mitigated this weekly fair value gap right here. So the daily is the one we are probably looking at right now that price might reach. So yeah, it could come here first by seeking this low into this higher time frame fair value gap, then what, rebalance this area coming here before pushing down to this level or this level before that push up will come. So there are possible scenarios. All you need, like I keep saying, identify this area. We might do this first. What do? We seek this previous day low into where? A higher time frame point of interest, or we might seek the high first into where? Into a higher time frame point of interest before continue going down. Whichever one price do, you will benefit from it. It doesn't matter what it's going to do. We come down, mitigate this area, come here, rebalance this area to continue going down, or we just come here, take out this high into this area and just what? Seek this low, break a structure, then probably a pullback, then continue going down here or here before that rally will occur. That's all. So if this week is going to be bullish a lot, then you might see a push down maybe Monday or Tuesday, then that rally will occur throughout the rest of the week and probably continue because we have a level here and a level here. So we are waiting. It doesn't matter. But this is what we have on GU. This is strictly like straight. Come to the chart, identify your area, then wait for price to get to your area. Now price is right here. It's going to open right here. If we are going to go up first or down, price will set up something as soon as we open. So all we need is patience and look at your chart, because sometimes if you don't look at the chart either way, how would you even know what price is doing? Or if you don't want to bother to look at the chart, then identify this your area as I do, identify them, set your alert, then that's all. Then just take your mind off the chart. Once your alert get hit, then you can look at the chart. And this is what we have on GU. If you have any question, you can ask.
No questions. I understand.
You sure you understand this?
Yeah.
No, no, this is not a laughing matter,
I
What?
know it's
It's not
not,
like
but
maybe you
you,
understand this.
I can
My
know. I'm gonna be honest. It's like I can pick up on certain stuff, and some stuff for whatever reason it'll get blocked, and then when you repeat it, then I get it. So I don't know if
No,
my
okay.
brain be
So the
trying to
thing is like,
absorb
can
it.
you identify, like, this is very simple. Mark out your fair value gap from the daily, but
Yeah,
you
I
see,
mean,
identifying something like this,
I'm
maybe it
still
will be
working
a
at
problem,
that.
right?
Andrew,
Yeah.
Andrew, I'm still working on fair value gaps and imbalances. I
Yeah.
haven't got that good yet. I just got good at doing the order blocks and stuff.
Okay.
Like, I
Okay.
mean,
So what
so
do
I'm
you get?
still working
What
on that part.
what kind of other block do you get good at? Because maybe you will just mark out only this candle. It's not, in this case, it's not just only this candle. That is why sometimes this
No, I mean, I'm saying I'm understanding more and more as you doing the training. That's why I'm telling you. Like
okay,
early
okay,
on,
okay,
I would get certain stuff it'll stick, but the
okay.
more I do the more you do the trainings,
Mm-hmm.
I catch it. So I'm
Okay,
still
okay.
working
And
with
you guys
the.
have to be watching the videos, because then it might help. So these two candles are one other block. Let me see. Probably two
Yeah,
days.
that order
You
block
see,
that you
you
had
see in
marked
the
up
two
on the
days
four
time
hour,
frame.
yeah, I saw that, so I
Yeah,
knew that you was gonna mark that as a point of interest.
yeah. You see, in the 2 days time frame, it shows like this. It becomes like more of one candle, because this one we haven't broken and closed below it, so we know how to define it. And what do you see here in the 2 days? What do you see? The three candles that are marked out. This line right here. Let me change it to blue or red. This, no, blue.
Okay, wait a minute. Well, okay,
It becomes one
so
candle.
how do you know what is a fair value gap? Like, just how do you know it? I see y'all all marking them up, but how do you know what it is?
How do I know
Like,
what it is? Because
well, okay, wait a
it's a
minute.
gap.
That might be a different question. Is it from is it a gap in between where the wick stops at or something?
So the fair value gap, right, is it will form in a three candle formation, three candlestick formation. So basically, you want to mark the very low of that candle of the, let's say, from the, if we are going higher, we're looking at bullish fair value gap. First, we identify this high, the first candle, the high. Whether if it has a wick, then the high, the wick. If there is no wick, just the body, then you just mark out the body, but just the high, whatever causes the high, you mark it there. Then the third candle, the low. In this case, like this shaded area, this whole shaded area, because you can see there is nothing here. That is why it's also called imbalance.
Okay, that's what I was getting ready to ask because I understand imbalance. So you could find your fair value gap inside the imbalance, meaning within them three candles, the wicks are not close enough tapping each other
They are not
for that middle
overlapping,
candle.
yes.
Okay, now that makes sense.
So it's just like, in a nutshell, fair value gap is the same thing with imbalance. You get it?
Yeah,
Yeah,
fair
that's
value
what I
gap
was.
It's the same thing.
an
It
Okay,
just use
now
imbalance.
different
see,
name.
and when people use different language, I'm like, wait a minute, I
Yes,
thought
they
that
use
was
different
invalid.
name.
Okay, I understand. That
It's
makes
the
so much
same.
sense because I can spot imbalance. So now that I know imbalance is fair value gap, then
Mm-hmm.
it's difficult.
Yeah.
So you understand now?
Yeah, I guess it's just the different words that everybody use. 'Cause I'm like, I can find imbalance. I can tell when a candle hadn't been mitigated, like the wicks is way far apart.
So, okay, okay. So one thing, because if you cannot understand fair value gap, is it the name that is confusing you, or what? If I may ask.
No, the only thing that was confusing me is probably just the naming. That's probably
So
what was
there is nothing
confusing because
like,
I can
don't
find imbalance. I can find
then write
where
the
you
three names down. When somebody spoke about these names, then you will know what they are talking about. Just write the three names down: a fair value gap, inefficiency, imbalance.
and
Write
they
these
all
three
mean the
names
same
down.
thing.
We are talking about one thing there. It's just names. You understand?
Uh-huh, I understand that.
If you have like a pen or something, you can also draw, just draw something like candlestick, however you want them, however you want to draw them, just draw it. Then you marked out the space and write the three names there, like imbalance, inefficiency, fair value gap, whatever you want to call it. It's your choice, but yeah, just write the three names there so you can know whenever they say like fair value gap, inefficiency, you can literally know what we're talking about.
Okay, that sounds good. I can draw myself
you
up.
you also have like a, what is it called, you have a chart, you have a trading view. Take a note, and for example, here, this is a note right here. You just put it like this. This is the three name. You already know. Okay, anywhere you see this thing, this is fair value gap, inefficiency, imbalance. Is the same thing we are talking about, just different names.
Okay, well we
And
good
you can
then on that one.
screenshot, if you want to print it and put it on your table or something. This is just black candle. This is bearish fair value gap. Then we have bullish fair value gap. If I start using other names, it's confusing. Those are just names, you know.
Yeah, I mean I understand now. Like I'm good. So
Okay,
now that you said that I understand with no problems.
okay,
Um
good.
So it's all three of them. I knew the imbalance. So that's the fair value gap and inefficiency. They all one
Exactly,
word. They
exactly.
all the same thing, just different
It's
words.
just different name for it. Just different name for it. So now you have identified your. Let me go like this. Yeah, your fair value gap, your inefficiency, or whatever you know it. But which name would you like me to be using when I'm teaching? Either ways.
No,
That
you do fine. Long as I know that, for whatever reason, imbalance always come to my head before everything else. And I guess that's because that's how I first learned it. But now that I know they all three mean the same thing, it's not gonna bother me to hear the other two words.
okay, okay, all right. So, like I say, these two candle, these three candle that are marked out, they are what, a key level, a point of interest in the market. Like you say, like you see in the 2 days time frame, you see it becomes just one black down candle, and this becomes one just green candle at the upside. But because we marked it from the daily, I already know what it is, that is why sometimes, if you marked out this one right here as your order block, price might not get there, and price literally just what, move like this and keep going down, then you miss this trade. You'll be like, oh yeah. But the reason why is because this is more superior. Why? In the other time frame is one candle, but remember it's bigger time frame than the one you are on, that you marked just this one out from. So that is other things you guys have to also pay attention to. And on this, like we are saying, fair value gap from the daily will be the very first area. You can take out this one. We knew this area was weekly. What does price do? Seek liquidity into a point of interest. Also, rebalancing efficiency. What is this inefficiency? Is a point of interest, higher time frame point of interest as well. But what is the liquidity lying here? Like, sweeping. Maybe this previous day low right here that is lying right here will be the high that needs to be swept into this area. And before you see price now come down to what? Seek a low into this area. It could drive more down into this whatever line is this, the color, it doesn't matter, but yeah. But one thing is that you already know your whole
I
point
think
of
that line
interest.
was the open close. You just changed the
No,
colors.
it's not open close. This is how I marked it out. This is it. It's just other blocks. These 3 consecutive candles. I only
Gotcha.
changed the candle, the color. I was talking about the color. This is the 3 consecutive candle. If I go to the 2 days, it's just one candle right here. All this, you guys need to be watching this video back to back. That is when you will really learn all of these points of interest, because I'm marking out this point of interest. Even if we are recording this video now, even if like you don't know what I marked out, so when you are watching the video, you will see when I marked out this line. This is another block in this time frame. So those things, when you rewatch it and you rewatch it, this thing is always going to stick in your head, because you've seen it like, yes, the same thing again and again. So you will understand the reason why we mark it out and all of this. So there is nothing more to look at this. We know our range from this high to this high. We know our range from this high to this low. And we have our point of interest, this weekly area and this daily area or 2 days area, plus the daily fair value gap where price haven't come to. So we already know what price is going to do or where we are heading towards. Like I say, where is price at? Where is it likely to go next? Like the closest, like nearest draw on liquidity? Where is this going to move from to get there? That's all. Price is here. So if we are going to go here, where is price likely to move from? It might move from this area to get here. But if we are anticipating that price is going to seek down more to this area, then here is where price is going to move from to come down this way. This is all thing you need to know. So you understand?
Yes.
Okay. Any other question before we look at any other currency pair?
No other question here.
I hope you guys will, although you can watch the video and mark out your point of interest anyway. And I don't want to even talk about BTC. We'll do that later. GBP AUD. I don't know if you guys are trading it, but yeah. So this is a new month. I just take another currency pair. GBP AUD. Forex.com. So first of all, we have this area because what? when we move higher to break these highs, this is imbalance. This is a huge candle. It's a displacement, so it's imbalance even if you are not seeing fair value gap in the monthly time frame. So what we are seeing is area of liquidity, which is internal range liquidity, and a point of interest, which is this other block right here. So we move here, so we know after we move there we are going to seek this high. Is the next area of liquidity we will seek. That is what external range liquidity. So what happened this month? We seek that high. Now we now have what? A range to play along with. High and a low of the previous month. So I can take this one out. High and low of the previous month. Going to the weekly. What do you have on the weekly? We see we haven't really broke and closed above this high. We haven't caused a break of structure. So what can we see right here? The first line of defense is this level, double flat area, open and close is this. So you know, open and close is not just when it's just two consecutive candles, that's become, this is open and close. But if you look at this opposite candle, open and close in this candle is like this candle, this green candle closes right here, but this black candle open right here. This is also open and close, double flat area. I always call it double flat area. So this is your first area that you might be waiting for price to come to, like this, and keep going higher. So we already know that our high and low of the month is this, like this. So we identify this area. There are other levels right here, here and here, but this is the first area we might likely reach from the weekly time frame. Then if you also go back, you know, this is a double flat area where price is also at right now in that way. So it doesn't matter, like we used there to move price down before, we can also use it, we can as well use it again. But yeah, and all this week we can go down to the lower time frame, like the weekly, you know, you can as well just move it higher to see some other kind of area. But looking at this weekly time frame, we already identified this area. I don't need this, neither do I need this. This is what we are looking at. Then the daily is where we want to be looking at real price action right now. So what do we have in the daily? First, this high was sick. Old high was sick because it's also a key level. This old high was sick, and what happened? Price rejected that area. So which means we want to be looking for opportunity to short this market down. But if you want to short this market down, where is a likely level that you will likely target? Here first.
It could come down to that order block could be a point of interest. I would say down a little bit lower.
Yeah,
Yeah,
listen.
right there.
First, it's just all about, this one is also a point of interest, right? Why do I
Yeah,
mark
that's
this
the
area
one I
out?
would
These
have.
three small candle, 1, 2, 3,
Yeah,
before this
that's the one
rally.
I would have targeted first.
No, not first.
Um,
Not first.
no, I'm saying me by just looking when you asked the question. That would have been the first one I saw. I wouldn't even have thought about looking to the left there.
Uh-huh. Okay. Yes. So any point of interest that comes before is what you're going to target. That's why we call it first line of defense. Because before price gets here, he has to break here, right? So this is where we are going to
Right.
get to first. If he hold here, then he can go higher. But if he breaks through this area, that is when he can come down here. That is why we call them first line of defense. So your first line of defense is right here, then before this one. This is also a point of interest. It's not ruled out. It's a point of interest. But we have this one first before this. And in this area, what do we also have? We also have a fair value gap around that area. You see? So right
Yeah.
here now, what are we looking at? A rejection after a liquidity sweep and balance and displacement. From the 1 hour, what can you see right here? We have this area that price has mitigated, and in the 15 minutes, we also have area right here. The price hasn't mitigated in the 15 minutes. So in this 15 minutes, depending on how this market is going to move, if it decide to aim for some liquidity, that means we might just seek this high into this 15 minutes order block before price might be heading towards down. So imagine you knowing that, so if this price has the ability to move down, it can move down to this area. Sometimes if you have a trade like this trade, this movement, it ran 500 pips from, if I go to my real thing, this is where we got in this trade. In fact, it's not just we got in this trade here, we got in this trade somewhere around this level. It moved higher from here. It moved higher. It keep consolidating back to entry. Then it gave me another setup here, because I know we have to respect my 30 pip stop loss. So it's not stopping me out, which is giving that vibe. So it gave me another setup right here. We enter again. So this is 500 and something pips, because what is the target? The target was this high that we just seek right now. So we need a pullback, and where is the pullback likely to be is the one we identified from the what? Oh, I'm using this one right here. This one right here first, then before this one. What are you looking for? A setup. And where is your setup? You can now go down to lower time frame. Why? Because we have meet some requirement right here by seeking this old high. So price can now move down. Our ideal target will be here, but looking at probably some time frame, like the higher time frame, which is the daily, you wouldn't rule any fair value gap out. You wouldn't rule them out. They can react, price can react off these levels, even if it's not like going to break this high or something. It could just react and pull back, then keep on react again and pull back before we get to where we are going. Because if price is moving, what do? We create price action by creating lower low, lower highs, lower low, lower highs, lower low, lower highs. So all this area we are reacting from to create a lower highs or something is a key level, a point of interest, like for example a fair value gap, a open and close level or something. Those are the places we are reacting from to create a pullback. Those areas are the area we are reacting from to create a pullback. So that is why you wouldn't rule anything out, but you already have the long-term target. Reaction is just a pullback, then to continue. Reaction is just a pullback to continue. So that is one thing about all of this. And now there was an entry right here. There's an entry right there. Let's say if you got this entry, let's just say for example, if you got this entry 30 minutes time, stop loss. I'm going to say 30 minutes or 30 pips stop loss. So your stop loss is here from this one, from this entry right here. From this entry right here. So you are still safe, even if you pull back to this area before continue going down this week, which is this, that area is in the 15 minutes area, like this. If you want to use 30 pips, 30 pips is still here, but you can just put it as the same. We don't know what price is going to do. That's why we will wait for price to open, then see what price is going to do. will wait for market to open, then see what price is going market is going to do. All of these are what? Fair value gap from area. So imagine you just taking this week trade to this area. This is 200 and something pips. The very first fair value gap, where is it? From the daily. We have one here. Let me see. You can see how they find that one. Right here. Let's just do this one first. So this area, let's say 100 pips. Let's just say 100 pips. If you catch this in the beginning of the year or something, you can be good. Or if you decide to catch up to this down, you are good. To this area, 300 something pips. So there is always this opportunity for you to be able to catch something good in a week. All you need is like, okay, choose this pair and focus on it. This is what GA is going to do, and we also talk about what GU is going to do. It's up to you now to know which one I want to, you can trade everything if you have that time to look at everything, look at the setup and what time they form. You can trade everything, catch everything. You understand what I'm saying?
Yes.
So it's all up to you guys. But the setup is there. I have shown you guys what the market is likely to do, identify the point of interest. It's all about waiting for price to get there and you react. And you react. So let's say this. All those points of interest are key levels. We don't rule anything out, like I keep saying. That is why I'm urging you guys to know the points of interest in this market. They are all key level. But the difference is that it might not hold price for long, but it might make price pull back. For example, this fair value gap might react price might react up there and pull back to the next point of interest that we created where we were moving into this area. Then if we now break that one into this area, then it now react price to pull back to the next area that we created while moving into this one. So that is basically how price move. Price move from one point of interest to another point of interest, from one point of interest to another point of interest. The teaching is the same. The preaching, let me call it preaching, is the same. All those things that I'm saying, you guys should sit down, make it make sense to you. Price move from one point of interest to another point of interest. If price is moving from one point of interest to another point of interest, what is price doing? It's rebalancing inefficiency, which is the imbalance, the fair value gap, and is repricing area of liquidity. What is this area of liquidity? A key level where buyers and sellers want to participate in the market. Price is repricing that area. That is why it's called area of liquidity. And what is this key level, the key area that price is repricing? Area where buyers and sellers is taking place, right? So what is there? Money. Because for a person to participate in this market, you need money. If you are buying, what do you buy with? You buy with money. If you are selling, what do you sell with? You sell with money. That is why this English is simple. Price reprice area of liquidity and rebalance inefficiency, the imbalance. This thing has to make sense to you guys, but I don't know what is going on that is taking so much time this is just an English word. This is inefficiency, imbalance. Price will come here to what? Rebalance this area. Why is it rebalancing this area? Because this area was not balanced. This market needs to be balanced. And if market is balanced, what does that mean? It means that buyers and sellers are participating in this market. This is simple. This market needs to be balanced. And when market is balanced, what does it do? It consolidates, right? It
Yeah,
means
once it's
buyers
balanced,
and
then it's
sellers
going
are
to.
participating in this market right now. When it causes a fair value gap, price need to reprice that area to what? To basically rebalance that area. So if price is rebalancing that area, what does it do? It offer the opposite participants, to participate in the market, right?
Right.
So yeah, but like I say, these are just setup. Setup has already presented themselves. It's just for you guys to take advantage on this setup. Just relax, wait for price to get here. Then you can take your shot. A selling opportunity. You just don't have to know where to target. Where would be your next area? Because we have a fair value gap right here. It's not necessarily that price is going to respect this fair value gap, but it's an area where price might respect. That is why you have to be conscious. Like, okay, yeah, this area, maybe if I take a sell, if it gets to this area, I might be looking to take some partials or something just to secure something, because price might just bounce off here and keep going higher. And if it's going higher, you think it's just going higher, it's going higher to take out this high liquidity. So is there anything that is not clear to anybody? I'm asking, is there anything that is not clear to anybody?
It's clear to me now.
Rose, what about you?
Andrew, I'm good. Sorry, I was mute because I'm talking.
Ah, okay. Then we continue. We like this one is just like a free gift setup, and some let after in few hours market is going to open anyway. We will look at this market. We will also be in touch regarding this, especially this GA, because the setup has already formed, not like GA setup has formed since last week. So we want to see the very first hour of this market, what it's going to do. Then we can know where to take price to. It's just taking advantage of this price. Like for sure, for GA, we have to take advantage on this GA. That's why I'm saying when market open, I will also update you guys, just inform you guys, especially on GA, because this price has, like, it's already it's ready anyway to move, and we already know where price might likely return to, down here or down here, even if we have some obstacle along the way. But
Andrew,
yes,
um, how do you clear your whole chart? Like, when I go to look at my charts and I want to start afresh, I have to go to all of them and just like, you know, clean them off one at a time. How you clear your whole chart?
I clean them.
No, I'm asking,
Yeah,
how do you do that? You don't got to go through the steps because you got fresh lines. But how do I clean my whole chart?
you can just click like this, remove indicator. Remove, not
You
Remove
indicator, remove
drawings. Remove
drawing.
drawings.
Not indicator,
okay,
drawing.
okay. So I left click and then
Right
that's when
click,
it'll
right
pop up.
click,
Okay,
right click, remove
right
drawing.
click. Gotcha.
Mm-hmm.
Thank you, Rosa too.
Yeah. So yeah, this is on GU and GA. So the next one will be GBPJPY. This is really interesting. So Rose,
Andrew.
you remember when I told you that this high, 3 months high and low, this low has been seeked. I want price to move towards this area. So what happened? Still in this area, we are still there. We haven't really moved higher, but I still want price to move to that area, even if this high and this low is still our trading range. Last week just did something very interesting, so which means price was supposed to go down like this if we were going to keep going down. If we go down, what are we supposed to do? We will create a new low, right? And that low will now become a new range from here to here. But what did price do? Price fade to create a new range for us. So which means the range we are still playing with is with this high to this low. But looking at the weekly time frame, what did price do? Price seeked this low and we started moving higher. What are we expecting? Remember, the bigger time frame, we still want price to come here. That is what I'm still expecting on this GPY, especially GJ. Now we have, I'm not gonna do that. It's just a high anyway, but it's not like a range. We have this high to this low in range, and the daily. What do we have on the daily? After, in fact, you guys remember, I marked out this. Oh my god, I marked
I
out this
think Anna
area.
get ready to come on.
Who is that?
I think Anna get ready to come on. She should be getting ready to come on.
Yeah, she's on.
Okay, Anna, I told him you was coming.
So you guys remember when we talked about, I marked out this area first of all, like this last week. I mean, yeah, was it last week when we were talking about trades? I marked out this area, higher time frame area, and the low, higher time frame low. Even if we consolidated, then from the 4 hour, I also marked out where this level right here. You see, Monday to Thursday, we didn't come here or here. Until Friday, what happened? Friday, we hit this level to move price higher to this level. What does price do now? Price rejected this level to do what? To only seek internal range liquidity, fair value gap, to rebalance this inefficiency. This price is going to start going higher. This market is going to start going higher. But for we to have that new overall daily range to the bullish side, this high needs to be taken. Then we might see a pullback because we have an area right here. Has this area been sick? No. Neither this fair value gap area, like this. This area will only push price. Price will only react from this whole area to push price back down to now probably continue going higher, because this high, this is the highest time frame high. We need this high somehow. We need this high. That is why I kept saying GJ is bullish for me. Even if, of course, even if we are trading back and forth, bearish. Opportunity I'm still waiting for, especially on GJ, is an entry in the very big, like low, to target at least this high. This is 1,000 pips. You can just let it run. No, It moved from here to here, even if it took like weeks, months, maybe 2 months or whatever, but it moved from here to here. Why can't this price move from here to here, even if it takes longer period to get there? It doesn't matter. But I want this high to be taken or broken and closed above on GJ. So looking at this, we have a liquidity run into what? A point of interest. Look at the point of interest in this case. What? A balanced area displacement, which is imbalance. What is this? Open and close area plus this candlestick. Price stick there, then move what? Take out this high, rejected from this area. So rejecting from this area, we pull back into inefficiency that was here. We started moving higher in the lower time frame. Probably we might just come down, because if price want to buy, we need to create always a power of theory anyway. Accumulation, manipulation, distribution. And look at this price. It's so funny. This area that I marked out has already been mitigated where? In this time frame. So if GA, we might just open and start running down and up on these two pairs, because everything has already been set. What happened on GA? GA has created that from the 1 hour entry that was here. Now it started moving down. What about if you just keep boom, 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 boom? We cannot control that. And what about GJ? It has created that setup and we have mitigated this area. What about if you just keep going higher? Zoom, 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 zoom. We can't control that. But all we want to see the opportunity for we to, get along with this trend that is about to happen. So which means if price open soon, we have to be able, you guys have to be able to spot all of these things. Maybe we might just pull back down a little bit. Why? Because we need liquidity, for example, and again, accumulation and manipulation before expanding. So we need to see movement down before that buy will start, to happen. I just pray if price open, price should gap down, just jump down, gap down, then that buy, you can jump in the buy. That is going to be the buy probably throughout the week on GJ. So those market has already set up. They have already set up. Last week was kind of crazy for GJ, consolidated up and down, but we still know where the direction is. A point, that's why it's always good. I speak about this every time. Identify your point of interest. Those are the things that is going to help you. If you don't know your point of interest in this market, there is no need for you to be even looking at the chart, because basically you don't know where price is going and you don't know where price will react from. So what is the point of looking at the chart? Know your point of interest. Those are the area that will help you. Once price get there, then you can start reacting or acting, I mean. So GJ, we are looking for buys. GA, we are looking for sells. Then GU is mixed, because we want to see that clear direction. If price move into this area, then we know we are about to sell. If we move into this area, we know we'll be looking for buy opportunity, either towards to this area or to take out this side. But depending on where this market move to first, that is going to give us our bigger pips direction. If you move into this area first, then we know to the downside you have more pips to the downside. But for GA and GJ,
Okay.
they are ready.
GJ, we looking for buys this week.
Buys
GA,
opportunity. Buyout
yeah,
opportunity.
yeah. Well, I mean buying opportunity.
GBPAUD, selling opportunity. So we are looking
And
for on
what
that
about
place.
GU?
GU right now is at the middle.
Yeah, because it's
I would like GU
consolidating.
to pull back for a long term buy, not like long term, but like for buyers. But
Yeah. Well, I mean, I was just making sure I had documented on my note, but yeah, GU looked like it's getting ready to be doing what GJ did last week. Played in that consolidation all week. That's all GJ did. Bounce back and forward last week.
that is why it's ready now to go. It's ready now to go. So yeah,
Yeah, and GU look like it's gonna have a consolidation week.
not consolidation. It's just going to move into any of this time frame, either here first to keep buying, selling down, or into here first to keep buying up. That is nothing like consolidation. Identify your point of interest, wait for price to get there. That's all.
Oh yeah, oh yeah.
DJ has a point of interest. Price move into a point of interest. That is why it's ready to go where it want to go now. Your point of interest is your map. If you don't have a map, there is no direction. Point of interest are your map. So inside your map, you can just put the street name. Then, right, it's ready to show you wherever you are going. You have to have a map. Your map is the point of interest that you know in the market. That is what I'm saying.
Understood.
So yeah,